Oh, uh, yes. So, uh, the 15-minute chart. Okay. So, here is the buy side liquidity. It's yesterday's high and previous day high. So that's why it's buy side liquidity. And this is the first sell side liquidity. So, if market want to go any side, so it should took one of these liquidity and move opposite direction to that. That is the basic idea. Like we don't force. For example, if it cross this buy side liquidity and then we trying to see a setup for bearishness. And if it take this side of liquidity, then we try to find a setup for buying. Okay, so that's what we are doing. So we are waiting for 10 a.m. because there's a high impact news. This is this is also a good liquidity here, which is like they are relatively high. These are like yesterday's high, yesterday's New York sessions high. So this is also a good uh, level of there is a good level of liquidity here as well. So the market took it and going down, but I'm waiting for the big chunk of liquidity over here and below here. So this is first liquidity I'm checking, which is like main level of liquidity is here down. Okay, so let's quickly check on the 1 hour. Yeah, uh, this is the first line of liquidity, and this is the main level of liquidity. So SSL means sell side liquidity. This also sell side liquidity. So this is like first level of liquidity which the market might take. Okay, and this is the first level of liquidity of buy side liquidity here, which market already took. Okay, this is there is a line on 15-minute chart. If you see, this is the line on 15-minute chart. So this is the first level of liquidity which market already took. Okay, still if we see on the higher time frame, still market on the consolidation state, right? Till from last 2 3 days, it's on the consolidation state. So let me show you it. Let's come on 1 hour chart, and you can visualize it as well. So from here, this is the Friday. From here till today, this is market is not leaving this area. So this is a consolidation, consolidating happening. So after consolidation, there is a expansion. So expansion can be happen in any direction. It can be in upside, it can be in downside. So how we know which side? We don't know. We let market do work and then trying to seek opposite side buying or selling condition. For example, if market break below this after 10, around 10 after the news, then we can trying to um, find out a setup for buying side. And if market get this buy side liquidity from here, so then we are looking for a sell side setup. So you can watch all the high impact news or kind of news at Forex Factory. So forexfactory.com. Let me write it for you. So if you are new here, so you can watch, mark all the important news at these websites. It give you news according to um, m- different markets and what time the news are coming and what type of news are coming. So good thing about it, so it already mark it red, orange, and green. So the red is the high impact news which we should consider, like while taking trade. So other type of news like orange or other colors, it's not important for us that much. So if you see, so in the Nasdaq market didn't take any kind of buy side liquidity, but it took it almost close to this London's London range, consolidation range. So London low is like on this fair value gap, which is here, which is marked in this blue. So it's a bullish 15-minute fair value gap. So and this is the liquidity here. I didn't write because I'm more concerned about the ESNT. So I'm just using this Nasdaq uh, as a reference. So if both the market are like in a synchronized and moving in the same direction, that is the ideal condition for us to trade. But if they are in opposite directions, so like if this is moving downward and ES is moving upward, then we should not, we should be little bit careful before taking in trade. If you have any question, you can like text on chat. So this is my 15-minute charts. I have 5-minute chart on other screen. So you also should have, this chart should be your fixed one. Uh, after and there's two charts. One chart you should open in 5 minutes. So once the market break any of these levels, then you switch to uh, another like smaller time frame to look for the setups. So here, this is the like 5-minute fair value gap when market going up. So it's a fair value gap. So market should respect it, but it didn't. So market went it through. Then once it market should cross it other direction, then it become inverse fair value gap. So now it's supporting downward movement, this fair value gap. So market from down it going upward and then see the closing. It's not closing inside of the right fair value gap. So this move is like 10:30 move, which we are talking about, I guess. This is like SMT is here because in S&P it took this high here, but in Nasdaq it didn't took this high and went down. So both the market are synchronized after this point, and this is the SMT. So it's a, like a SMT means a smart money technique. So it's a divergence or yeah. So let's wait and watch. First couple of months you just open your chart and watch and try to figure out what marketing trying to do, and if you are understanding and able to understand where market should go after you watch, after like if you just watch market like this way for like 1 month or 2 month, you get to know like where's marketing heading, uh where's marketing heading. So you get a fair idea, and after that you can like try to master entry and exit techniques and risk management, and then you should do some back testing about if you make able to make any strategy, and then for 1 2 months you should be back test, and then 1 or 2 months at least you should forward test with paper trading or something. You don't put money until you know you are comfortable losing your money. So if you want to enter market with $1,000, also should be ready to lose $1,000. So because market always have a risk. So before earning, you should consider the risk, and if you're able to manage your risk properly, you're able to make money in the market. Otherwise, it doesn't matter how much accurate you are gonna lose money. Let's not set up. When marketing going downward, we should look for upward. So see the first move at 10 o'clock, it's downward, right? And it take this liquidity and now it's going back. So we can see these things on, because this is a one candle. If we put this on the 5 minute or 1 minute, you get more, little bit more understanding what market trying to do. It just took this liquidity here, little bit. These are like equal highs, equal lows. So it just took this lift like my mark. So it's this kind of small liquidity took, and that's why So what we get to know about this. So this move, let me get into 5 minute chart. So never try to follow the price. Like if we see at 10:30 price went down, so if we have no understanding what market trying to do, we can, some people like can sell here, like it's big movement, so they start selling. We should not try to do it. We should wait for our setup. It doesn't matter at what time we are getting our setup. So if we are not getting any setup today, so we should have patience to not enter to the market today. It's better to save money and not lose it. Patience is the key, understanding the key, and knowing the narrative behind the market is also a key. For me, let me go for 1 hour chart as I saw you earlier. So see, this is still in this range. So it's still in consolidation, but on lower time frame, we are seeing it like seeking and destroying. But if you see the bigger picture, it's still under consolidation. So we should wait either for this liquidity or liquidity up here to get a big move. These are like small move. Yes, we can trade them as well if we know, if we are experienced and we are fast, and so and we have that taking able to take that kind of risk. So let's move down to 1 minute. So this is 1 minute chart. This is the line which we draw on 15 minute. Okay, this is the sell side liquidity as well as for us, but it's not big liquidity. Okay, this is small chunk of liquidity. So let's come to 1 minute. So if we see on the 1 minute, this is the low point. Okay, this is the swing high, and okay, this is the kind of its market structure you can see. Okay, but this is on lower time frame, so accuracy of this is very low. And plus, for us, because we want to take we want market to take this liquidity or either this one. So these between liquidities, it's not exciting me here. But yeah, if you want to take trade or you want to take a risk, you can do it here. It should be entry should be here, stop loss should be here, like 2 3 points stop loss and target should be here around uh, 10 points. If market respect this fair value gap and this market structure break, but this is because very small time frame and as I said, this liquidity here down is not as much. So see, okay, this is the liquidity, and below that we have a fair value gap, and below that we have a uh, structure. And again, bigger liquidity pool. Okay, so here is also fair value gap. You see here. So if you want to take risk, you can take here as well. It can be one trade. So it can be you can get the target or you can stop loss, but the risk is less and the reward is also uh, a good reward, like 10 points. So it should be one issue two. It's a buy side, not sell side from here. Let's see what uh, Nasdaq doing. So Nasdaq is on 1 minute. There's no structured break here, but yes, there's a fair value gap and it's respecting it. So just your first target should be here, not above, because this is the low hanging fruit for us and it can be if you enter on like here on 9 and it should be on 19, so it should be already 10 points. So 1 point is like depend on your if you are taking micro or mini. Okay, it can give you a good small trade. I'm not taking it because I'm not uh, comfortable, because I don't know what right now what market trying to do on higher time frame. As I already explained, so my higher time frame analysis is to take this buy side liquidity first or this sell side liquidity first here, and then I will look for the setup in the positive direction. Okay, but this is a small area, this is a small liquidity, it can give you a small setup as well. Look at the Nasdaq. Nasdaq already gave you the good points from here. From if you buy it, let's say 200, it already give you 40 points here till here. So it can be good good trade for you guys. But I personally don't trade Nasdaq because of I'm not comfortable with it because of it's because of the spikes it gives sometime. So that's the only reason I'm not doing Nasdaq with me. If I have to do, I do it with micro lots because it move very fast. So let's say if you buy at here 5508 and market went till 1514, so it's 6 point. Okay, so shouldn't sell here, but as your stop loss should be here on 505 3 point stop loss. So at this point when market is here, so your stop loss should be move upward around 1 point or 2 point. So that if market went against your direction, it take very your stop loss, your loss should be protected. Okay. Yeah. So that's why I say the risk management, if this trade is under your risk management, you can buy it, or if it's not, you should not. So market kind of choppy here, and it's not providing a clear, because the problem is the market, according to me, what I feel, market don't have ample amount of liquidity right now, because big chunk of liquidity is here and down here. So until those level are protected, not taken out, so market trying to do create liquidity itself. So that's called market do engineer liquidity itself. How it can do, so it doing by, let me show you, it doing by seeking opposite side small time frame liquidity, like market did this level of liquidity here, then seek here, so it can go like little bit up here and then go down or up here. So it creating before going to big move. So this week there are high impact news, so all the week, so still we don't know how accurate, like until this level here and the final level like down there, this is the major liquidity here and higher liquidities here. So we don't know overall market direction on respectable time frame at 1 hour at least. So this level up here, what I say, if you see, this is the 5 minute fair value gap here. So market didn't expect it go down, then it become um inverse fair value gap. And if you see on the 1 minute how market is after crossing it, how it market is respecting it. So it's earlier it was bullish fair value gap, but after crossing it, it become bearish fair value gap. So now it's giving downward, supporting downward movement. Okay, and the same way these fair value gap. So if we see, if this is 5 minute or 1 minute, there is no 5 minute fair value gap, but on 1 minute. So Earlier it stayed bullish, but now market didn't respect it, went down, so it act as a bearish fair value gap. We call it inverse fair value gap. Okay. Better. Rather already that is trade done. So this is like how, according to me, you should read market every day. And when you try to read it every day, you get to know these things are there in the market every day, and you're able to eliminate noise. So where is the noise? So you're able to eliminate. For example, on lower time frame, this took a nice it look a nice trade. Okay, so you should add this in your journal. Like uh, we shouldn't like initially I said this is one minute time frame, so I didn't uh, believe trust on it, and that's what happened. So it gave a nice little up move, but it went down. So that's how I know this uh because because of my experience in the market. Okay, so you should know higher time frame narrative at least on 1 hour chart, and then trade accordingly and manage risk. And before entering into any trade, you should mark your stop loss and target first. And please do paper trade before before putting your hard-earned money into the market, because market don't care about your emotions, your needs, and anything else. It's pure logical. So I guess you know what is a fair value gap. So if you don't know, fair value gap is a gap between any three candles. So for example, see here, well, let's say here is a one, two, three. So the low point of first candle, this is the low point of first candle, and the high point of third candle, this is third candle. So in between, if these high and low, a low first candle and high of third candle, if they meet each other, then there is no gap. If they don't meet each other, like here, then this is a gap. This is called a fair value gap. Okay, so you should, if you are trying to practice, so you should try to mark all the gaps you see on on all the major levels, like on 4 hour charts, then on 15-minute charts, and then on 5 minute charts, and then on 1 minute chart, and then try to see what market do to these gaps. For example, there is a gap, so market went up, fill this gap completely. Okay, then leave here a gap, then market come here, fill this gap completely, then market went little up, then went down, then create a gap here, so market went up to fill that gap. Okay, so try to figure out like what market try to do just by analyzing fair value gaps, and you should mark them as they are printed. For example, uh, if this candle close here and the next candle close here, then if there is a gap, just mark them immediately and try to see if market come back to that level, that fair value gap or not. If you have any question, please. If I'm asking why you marked small by John from I marked small by John from higher, John higher from previous low, but not in case of BSL. I didn't understand the question. What do you mean by John? So let's mark get back on 15 time frame, 5 minute time frame. So why you mark small by John higher? Okay, so yes, I understand the question. So I guess Vikram is asking why I marked this one, but not up here, like up here. So like mark proper 9:30, leave at mark. So the reason is when you open the chart, so this is small consolidation here, okay, and this is we can mark here as well, okay. There's no harm on marking here as well. So that can be sell zone, okay? But we always in the market we always look left of the present, okay? So let's say at 8:15 I mark at 8:15 I see these are like equal highs and I should mark, then I should look left to it. And if I look into left, what I see, this is equal high, okay? This is triple one here, one here, one. This is very uh, three equal highs, so market should take this thing, and market did it. Okay, but after this level, because this is around 8:15, 7:30. Okay, after this, so I assume this look more significant to me because this is higher and this give more liquidity. And why? Because this is, if you see the time, this is yesterday's yesterday's high on regular market, yesterday's high. So that can be a major level, okay? That's why. And and like actually I don't mark on small time frame, but just to show to you guys, I mark these levels. Because for me these are not as important as the bigger one here and here. So until then, if those marks are not cleared, I'm not I mean I'm not getting into the market. But like this level is really good because this is a previous day high, and from here market did respect it and went down. It's a good amount of liquidity here from previous day. 9:30, it's New York session, so it's a high for New York session. So it took New York high session and got good amount of liquidity, and then it went down. I hope I answered your question. So same thing. This is a 5 minute frame. So this is market consolidation here. Let's say from here to here. Okay, so what market did? Market went up on the higher side of liquidity. It take it, and from here we start looking if a pattern or a signal or wait for our setup to give a downside trend. Okay, let's see if we get any um, entry here. So yes, if we see on the lower time frame, we could trade here at this point. Okay, this is our order block, and here is the fair value gap. You can trade from here. You can sell here and put a stop loss above this green candle high, and you get a nice comeback till here, lower side liquidity. If I s- if let me go back to 5 minute chart. So see what happened. This is consolidation. Then market went to the expansion for expansion and took a liquidity, and then this is a distribution. But this is on a lower time frame. It's a 5 minute time frame. If let's say I show you one hour time frame, it's still under the consolidation stage. So this everything here is consolidation, and market went outside of this, either upside or downside. Then the actual move, which is big, like 100 points or 50 point, 60 point move, both in New York or Asian, we are able to see that. Okay, so this is the fair value gap, okay, which we already marked, and in Nasdaq it already come to this fair value gap. But on ES it's still not there. So it's like 15 minute or it's a 1 hour fair value gap as well. And that's why I said you should mark all the fair value gap practice, like 1 hour fair value gap, 5 minute fair value gap. Okay, so it's 1 hour, and if we see this is our 5 minute, 15 minute fair value gap. Okay, this is 15 minute fair value gap. So see if you see the logic, this is a consolidation, this is accumulation, this is distribution. So it's a classic setup. Okay, this is how market do. Market first consolidate, then manipulate. We can say it's a manipulation. This is a kind of manipulation, and see the actual move coming downward. Okay, so if this is how you should read market, but it's on a lower time frame. If the I see on the higher time frame, that's what I'm trying to see here. This is the consolidation phase. Okay, this is all consolidation phase. If you see, these are like very uh, relative equal highs or equal lows here, and this is a consolidation stage. Market from last 2 3 days is in a consolidation stage overall, and we are not seeing a high lower time frame, and that's how we make our buy for the day or the week. Okay, like if we go on for 4 hour chart or weekly chart, then we make our buys according to that. So it's 10:30 already. See the move after 10:30. So it's 10:30. Okay, so you can see the movement in the market after 10:30. So that's suddenly the thing that what to win, occupied maybe the different answer. Translate to me. Also, hmm? Yeah. Okay, so I think it's clear. And if you go to 5 minutes, so see, market companies to value gap, giving it respect, going back. Okay, we come to 1 minute. So it's market went down from here. It gives a good family gap here. Okay, excuse me. Equally, very big liquidity chunk. So this is the yesterday time. This one is yesterday time. Consolidate, manipulation, this one is 50. Now it's time to be able to get. This one is investing it. This is one of the this is overflow. Hello. हाँ हाँ Okay, so it already took sell side first liquidity. It already took. Okay, okay. This is the first level of liquidity which we are talking about since morning. So it already took it. So if we see go on higher time frame, so this one already gone. Okay, and here this one is left. So this is the consolidation phase. It went down. It should come here till here at least, or then it should take this one. If yeah, see these levels are so clean, so it can also take here as well. Okay, so this is how this is 1 hour candle. Okay, so if we see on the 5 minutes, 15 minutes, this is consolidation, this is manipulation, and this is the distribution. Okay, so this is how you plan your trade. Okay, we already took this one here. Uh, we put a sell order here, and our target is done for the day from here till here. Okay, so good number of amount like 20 20 pips we only took around, so it's around $1,000. Okay, so yeah, we're done for the day. We hardly do any trade after 11:30. Okay, yeah, thank you. Yeah, we will be live tomorrow, same time around 9:15 for the market. You can watch now the market, but very, very careful. Uh, After 11:30 or in the lunch hour, 12 to 1, to taking in trade. You can, if you want to trade, you can trade in the PM session from 2 to 3 or 3 to 4. If any of these levels are done, okay, and then you can look for buy side setups. Okay, and if you have any questions, yeah, you can post the chat. Okay, thank you. Good luck.